Good morning, financial professionals. I am Preston French, Regional Vice President here at E4 Insurance Services. Welcome you to the BREW call today. BREW is short for Building Relationships Every Week. Thanks for tuning in with us. For those of you joining the BREW for the first time, welcome. We'd like to start this BREW call by celebrating today's national days. The first one is National Sugar Cookie Day. So if you got a crumble cookie close to you, make sure you go by and pick up that sugar cookie. And then the second national day for today is National Fashion Day. So make sure you have on your Sunday's best today and go easy on the sugar cookies because you want to make sure you fit into that Sunday's best tomorrow as well. So those are our national holidays, our national days, I should say. The June lineup, or I should say the July lineup for our weekly brew call will be focusing on worksite and voluntary guaranteed issue. And today we have a special treat for you all. We have Maria Ocrant, the Life Field Director with Cincinnati Life Insurance, here to talk about all things Cincinnati Life Worksite Plan and how to assist your business owners by offering guaranteed issue life insurance. We encourage you to use the chat box, raise a hand to ask questions. All attendees are entered into a drawing for a CE voucher and a Starbucks gift card, and we will announce the winner at the end of the call today. So with that, Maria, thank you for being with us today. I'm going to basically turn it over to you. I think you got a few things you want to share with us on Cincinnati Worksite Plan, and we may have some questions for you at the end.
Thank you so much, and thank you so much for having me on. And thank you to everybody for joining us today. My name is Maria Ocrant. I've been with Cincinnati 8 years. I've been in life insurance 30 years. So definitely something that's near and dear to my heart, as is this program. I'm going to go ahead and I'm going to share my desktop here so you can see the presentation. All right. Okay. So Cincinnati has been offering this for 50 years. It's something that we do very well. And, you know, when you're thinking about your advisors, your clients, who you work with, this program really allows an advisor to create a deeper relationship with a group or with your client. If you're an independent agent, not only does it allow you to add another line, but it also allows you to cross-sell other services. If you work with business owners, you know, who you manage maybe assets for, you can bring another service by providing a sense of security for their employees. Also, another way to talk to business owners, or let's say maybe it's a backdoor in to help them with their own needs, is to provide the security for their employees and then circle back with them and say, hey, this is what we were able to do for your employees. How about you? What's your perpetuation plan? Do you have something in place? Do you have a buy sell? And if so, how is it funded? So there are many reasons to offer this. My favorite reason is the fact that I know I'm doing something for a family. I'm talking to someone who normally no one ever talks to about this. So to get started, our plan is different than most plans. It's not necessarily a group plan. So what I like to say is it's got the benefits of being part of a group without any drawbacks. With a typical group plan, you have the employer who is the owner, and the employees will have a master certificate, something to that cause. Now, if the employer changes their mind and doesn't want to offer it anymore, that employee is stuck. That is not the case with ours. With ours, the employee owns their own policy. What you'll see in a few slides, it's that we are able to personalize our program to fit their needs. So each employee can customize it based on their family structure. Typically, when we offer this program, we do need to have a minimum of 15 employees. And that is because that's the only way we can offer the guarantee. So with that in mind, I'm going to start talking a little bit about it. The program, as you're going to see, is going to include more than just term. And then just to reiterate, the employee has ownership of these policies. One of the reasons that that's so important is if they decide to leave their place of employment, or they're downsized, or they're retired for whatever reason, our policy follows them. And at that point, there's not going to be any insurability questions. It's completely portable. The product itself will not change. As in most group policies, I'm sure you know that there are changes, right? Ours does not. So the cost will never change. The death benefit will never change. As long as the employee keeps paying their premiums, this policy will follow them as is, even when they're no longer with their employer. So let's talk a little bit about what does it mean to have this guaranteed issue. So employees who are eligible must be working at least 20 hours a week. Not only can we offer this to the employees, but we can offer it to spouses as long as they're working somewhere 20 hours a week. And we can also offer it to children. For children, if they're between the ages of 15 days to 18 years old, there is the option to add it on to the employee's policy as a child term rider. So that would only cost them $1 a week. That $1 a week would give each child $10,000 in death benefit. So I remember once having a group of people that I was explaining this to, and I had one guy raise his hand and he's like, so he goes, I have 6 girls. So does that mean it's going to cost me $6 a week? And I said, nope, it's still going to cost you $1 a week. It's going to give each girl $10,000 in coverage, but maybe we should talk about how much life insurance you really need, because with 6 girls, you're going to need a whole lot more. But anyway, so $1 a week covers each child for $10,000 in coverage. And then once that child turns 25, they have the benefit of converting that term rider to a standalone whole life policy. And that could be up to $50,000. So that's a huge benefit, because we do have children who are uninsurable. We have children who take medication and that medication makes them uninsurable. So this is really buying them their insurability for the future. Now, on older age children, between the ages of 18 and 25, as long as they are full-time students, they're completely dependent on their parents, they're not married, they're not in the military, we do have some standalone, and they could do whole life or term or return a premium, which we'll talk about in a minute. As I stated earlier, as long as you have 15 people that we can see one-on-one, then what we can offer is a guarantee. The guarantee means we are not going to ask any medical questions whatsoever. We're not going to look for medical, attending physician statements. We're not going to look for any of that. The only question that we really ask is, are you currently smoking cigarettes, or have you in the last 12 months? So when I'm doing the presentation, I usually say, hey, listen, people, if you're smoking anything else, I don't need to know. The question only asks for, are you smoking cigarettes? And that's because our rates are based on, smoker versus non-smoker rates, and smoker being defined as cigarette usage currently or within the last 12 months. This is a payroll deduction, so it makes it really, really easy for the employees and as well as the administrators. Okay, any questions so far, or we're going to save those for the end, you said, right, Preston?
Well, we can save them for the end. If one comes in, we'll stop it, but I have not gotten any that I have seen, so roll on.
All right, thank you very much. All right, so what is guaranteed? So ages 18 to 50, we guarantee up to 100,000. 51 to 60, we guarantee to 75,000. And 61 to 70, we guarantee up to 25,000. So this is the most as far as the guarantee for the employees. You will see over here in this column, the total amount available in the program is 200,000 in death benefit. So what that means is, if they would like to apply for more than what the guarantee is, we will handle that additional amount on a simplified basis. What that means is, we're going to ask some medical questions. We'll ask height and weight. We'll ask about like the top 25 impairments like diabetes, heart disease, high blood pressure, cholesterol, that type of stuff. Then an underwriter will look at that, and then based on the information, the client will either fit into the program or not. They will be approved for the additional or not. I can tell you that we do approve up to 90, I think it's about 92% of people that apply for additional. Now, one of the questions that's usually asked here is, well, what if they apply for more and now we have an underwriter looking at their medical history? Are they going to take the guarantee off the table? And the answer to that is no. That's why it's guaranteed. So we will always give them the guarantee no matter what they tell us on the simplified. Okay? In the middle here, you will see this is the spouse's guarantee. So ages 18 to 60, if, and take a look at this column where it says employee participation required, you see here that it says no. What that tells you is the employee does not need to buy on themselves in order to buy on a spouse. And that is something that is very different out in the benefits world. So if the employee does not purchase on themselves, they can still get $15,000 in death benefit on a whole life for their spouse. Okay. If the employee says, well, you know what, maybe I'll just take a minimum out on myself, which can be done, then what they do is they increase the death benefit that they can get on a spouse, and they also open up their options to any product or combination. So a lot of times, these employees may have spouses that are uninsurable, and you know what, that $10,000 makes a difference. So keep that in mind. And then as far as children, I think that we've already covered this. For those that are 18 to 25 years, you can get a standalone policy on the term 20-year or the return of premium. And we're going to get into that in a second.
Hey, Maria, real quick, before we go to the next slide, I have a question in the chat box. Are there any other states besides New York where this is not available?
That is correct. New York is the only state that it's not available. Otherwise, we will write it in all other states.
Great. Perfect.
Thank you. Okay, this pretty much goes over simplified, which I've already told you. One thing to capitalize here is there's no difference in rates. So if they're applying for more than their guarantee, it's whatever is in the program. We're never going to ask for more like you would in individual life insurance. It's not going to be, okay, well, this now looks like it's a little bit highly rated, so it's going to cost you more. That's not part of it. It's does it fit in the program's cost structure or does it not? Okay, so what exactly is the program? What are their options? So as far as term, they have a 10-year term or a 20-year term. That's in increments of 25,000. This term can be converted to the whole life anytime before the end of the term or the client's 70th birthday. Of course, the cost will be at that age, right? So if I want to convert it in 5 years, I'm going to be 5 years older. So that's the cost will be based on me being 5 years older. Okay, but it is convertible. And that's the term. Now, something that's unique in the market, especially for voluntary benefits, is our return of premium. So here's how this works. It is a 20-year term. At the end of the 20 years, the employee will stop paying. And then at that point, they have an option. And the option is, do I still need this life insurance policy, right? That's what they're going to ask themselves. And if the answer is yes, then they will have a reduced paid up death benefit that will stay in force until age 99. So they're still going to stop paying after 20 years, but now they're choosing, hey, I still need some insurance. I'm going to keep it. I'm going to have a reduced, so maybe initially they applied for, 25,000. Maybe the reduced is 17,000. This will all be shown on the rate sheets. But hey, if that reduced to 17,000, I'm going to have that until age 99, and I don't need to pay on it anymore after the 20 years. Okay, that's option one. Option two may be, well, you know what? I took out this policy for a specific need. taking care of that need. I don't have any bills to pay. My mortgage is paid off. I don't want to leave any money. I would prefer to have 80% of the premiums that I have paid throughout the lifetime of those 20 years sent back to me. And I'm going to bypass having any other life insurance. And that's what we will do. We will send you back 80% of the premiums that you paid during those 20 years. And then that's it. Then there's no life insurance coverage. So not only is this unique in the marketplace, but I would tell you that people that I've talked to, typically between the ages of 23 and like 45, really like this option. They like the fact that at the end of the term, they have some decisions, they have some options to make, and that gives them a little bit more flexibility. So one of our popular programs.
Hey, and
Again, yes.
Maria, also, I know not to shift away from the work site plan itself, but Cincinnati is one of the only few carriers I know, maybe the only carrier that still offers a return of premium on their individual product, the term product as well, correct?
That is correct. We're one of two. I do know that we're very competitively priced against the other one. On the individual side, it's a little different than this one. The difference is on the individual side, we do give the option for 100% of their premium returned to them.
Correct.
But
And then
yes,
if they select to not receive the return of premium, whether it's the 80% in the work site or 100% in the individual, when they take that reduced paid up amount that they're basically allotted, it comes over with cash value too, correct?
it does. It does. Yes. Well, when you say it comes over with cash value, there's going
I,
to be a, go ahead.
correct. I guess what I'm saying is they don't forego basically the return of premium. A portion of that or all of that will come over into the reduced paid up policy, correct?
That is a question I've never had. I would need to look at that, to be honest with you. But I will get you that answer and get back to you.
Okay. Thank you.
Yep. Let me write that down. No one's ever asked that, Preston. Good question.
Well, and I've actually asked for the reduced paid up. We've had some individuals that have written the individual term policy and they've went with the reduced paid up option, and we've got the illustrations and the actual policies back, and it shows cash value in year one. So I know that a portion of it comes over. It may be all of it, but they don't just, it's not a paid up policy with the life, I guess the death benefit or face amount with zero cash value. There is cash value in that reduced paid up option if they select to keep it.
Yep. I've seen that on the individual side. I'm just not sure if that's the same on the worksite side.
Yeah, yeah.
Yeah. So I'll check on that. Thank you for the question. Okay. The next option that we have here is our whole life. So we have a whole life paid up at 65 or paid to 100. So the difference there is a whole life paid up at 65 means that they are going to pay for the program, pay for that policy until they turn 65. After that, they no longer need to pay any premiums, and that policy remains in force until age 121. So we wanted to have something out there where, at 65, people are thinking about retiring or retiring. The last thing they want is to worry about another bill. So we wanted to provide that option that, hey, you can pay this until you're 65, you're done paying, and then you have a policy that's going to literally last you your whole life, right? Pun intended. The pay to 100 just means for as long as you're living, you are going to pay the premium. So that's the other option there. Now, with the whole life, there are smaller increments. Up until now, we've seen increments of 25,000. With the whole life, our increments are in $5,000 increments. So when we talked about even if the employee would like to, doesn't need anything for themselves, maybe they want to get more on a spouse who's uninsurable, well, then they could do like a $5,000 whole life minimum policy. Now they can get more on their spouses. So we do have a very small amount of 5,000 that they can get in order to get more on their spouses. And that's pretty much the whole life. Okay, so these are the products that are offered within the program they can mix and match them. If someone's guarantee is 100,000 and they wanted to do 25,000 in term and 75,000 in whole life, they could do that. They can mix and match it any way they want. So they don't have to stick to just one product. Lastly, let's talk about what support. E4 is there to support you. I am here to support you. We're all here to work together. So anything that you may need, we're here as a resource to you. So keep that in mind. Lastly, I wanted to provide you with, what target markets do we have? Where do we do really best in? And those industries are automotive, such as like car dealerships, distributors, fabrication, manufacturing, healthcare. One that's not listed is banks. We do really well within banks. Prospects, you should be thinking to yourself, hey, where would this fit? Look at your commercial accounts, your business owners, your 401k groups. Maybe you have benefits, other benefits that you offer that you want to pair this up with. So these are the, as you go through your checklist in your head of, hey, who could I talk to this about? These are the people you need to think about, and then just jot them down. Okay. I didn't want to make this boring, so I hope I didn't, but any questions?
Yes, absolutely. I've got a couple questions myself, but there's two in the chat box. So going back to the return of premium feature, one of the questions is does the return of premium feature have a vesting schedule? So if a client decides to let the policy go after 7 years, do they still receive back a portion of the premiums paid?
Yes, there is a vesting schedule, and that would depend on each person's like age and death benefit, but we can surely get that to you. Yes, there is. Good question.
Then the second question is, do you usually, I guess would an advisor usually see the enrolled during open enrollment or mid-year off enrollment times?
So ours is unique in the fact that it doesn't have to be at any specific time. It doesn't have to be at any enrollment time. As a matter of fact, what we would like to see is you doing this separate than any other enrollment. It's much more successful that way. When you pair it up with other things, there's more choices for that employee to make. They get lost. And sometimes you find that life insurance is the last on their list. So it can be done at any time of the year. We do want it to be a convenient time for that employer. We want to come in when, things are quiet or when things are where they can dedicate time versus, at a time of year where it's their high stress time. We don't want to be then,
Sure.
but any time of the year is fine.
Sure, perfect. And then there was another question in the chat box, and it kind of goes along with the one I was going to add. So, did I hear you correctly? And I understand that you need 15 employees to offer the guaranteed issue, but how many employees need to take the plan?
Great question. We do not have a participation minimum.
So as long
So,
as there's 15 employees, one app will get guaranteed issue.
right, we need 15 employees who work at least 20 hours a week.
Correct.
We would want them to be W-2 paid, so keep that in mind. But as long as you have that, now we can offer the guarantee. And yeah, it could be 3 people can take it, 5 people can take it, 10 people can take it. Yeah, no participation.
Right. Perfect. So one of the second questions I have, what are the enrollment conditions that must be met in order to offer the guarantee?
Okay,
Right.
so in order to offer the guarantee, education is big with us. So what we would like is maybe 15 minutes to go over the program with everyone, with all the employees, just to give them the highlights. This actually will save us time on the back end when we do the enrollment. Otherwise, you're going to go through the program, 20 people, you're going to go through it 20 times. So we want 15 minutes of everyone who's eligible to be there. So not just, oh, these people are interested and these people are not. What we want to avoid is we don't ever want the spouse of an employee who died to come back to us and say, oh, well, if he or she would have known this, they would have taken life insurance. So we want to educate everyone on what our program actually is, because a lot of time when people hear life insurance, they think, oh my God, they're going to ask me height and weight. They're going to ask me this, and I don't want to answer it. When they come to that educational meeting, they'll find out, hey, we're not going to ask any medical questions. So we want that. And then the second part of that is we do want to do a one-on-one enrollment with each person. This is not a pushy sale. This is an educational sale. This is what works for your family. I've had people that come into these one-on-one enrollments bringing me what they already have in force. And there are times when I have literally said, you can purchase our program if you want to, but you really don't need it. And then vice versa, where they say, hey, I want to sign a waiver. And then I do ask a couple of questions of, okay, do you already have existing? And then I'll get the typical answer. Well, my husband has it at their company, or my wife has it at their company. And then that warrants a discussion. Well, let's talk about what they have and open their eyes to the fact that when it's group coverage, they may not be able to port it. The death benefits might change, the cost might change. And then we encourage them, go back to your husband, have them ask their employer these questions, and then let's talk again. So long answer to your question, but yes, we want to be able to offer an educational meeting to everybody, and then a one-on-one enrollment. If you are talking to someone who has a manufacturing plant and they have 100 people, we understand you can't take 100 people off the floor at the same time. We can be very flexible with that, right? So if they want to do it in groups of 10, we will be there all day and we will do it in groups of 10. So whatever, there we can be extremely flexible to how they would like to see us do it.
Yeah, and another thing I'd like to bring, because I've actually experienced this. I've worked with advisors that have offered the Cincinnati Worksite plan. One of the things that I have found, I guess, pertinent or important is we have actually had employees sign up for the plan, right, during the enrollment. Okay, the enrollment wasn't completed, right? We're doing it over a course of 3 days. We had an individual that took the policy, signed the app. Obviously, all of the apps for that group were not turned in. Unfortunately, the individual signed the app that day, was killed in a car accident the next day, and the benefit still paid out.
That is correct. I've actually heard of 2 of those happening. So when we do the enrollment, you know, preparing for the enrollment, we will have worked with the HR person or whoever handles payroll, and we will know when their first deduction is, that next month when we start the deduction. Um, and then, we date the policy a month after that. So, for example, if we were doing one today and the first deduction was in August, our policy would be dated September 1st. So a lot of people think, oh my God, I'm not going to be covered. Well, that's not so. The minute they sign that application and then the agent signs, they are covered. So if we were doing it today, even if it had a policy date of 9/1 and they, God forbid, didn't make it home tonight, we would pay out that claim.
Yeah, and that's powerful. And I'd also like to share, and then Dan, our president and managing partner, um, said and has preached to all of us. We actually offer the worksite plan to all of our E4 employees, and we actually about a year ago lost an employee unexpectedly due to complications from COVID, and the benefit was so meaningful to that employee and his family. So we're thankful for the program. We really are. And I guess two
Preston,
questions. I know we're running up against time.
If you can hear me, I'm able to unmute now. Sydney was allowed that, but I'm looking at an email that I received last July from Maria, and it came to her attention that Ted had passed, and she was saddened to hear the news. She actually wrote that her heart fell into her stomach, and she thought back when we did the enrollment and whether he had enrolled. And believe me, when I tell you that tears welled up in her eyes when I found out that we did, in fact, enroll him. So it hit home with us, and I went from being an insurance agent to an employer, understanding the real benefit that this offers to our employees, and it really hit home. And I just want to say, we've lived it, and it's something that we're passionate about, and we want to make sure that every employer can offer this to their employees.
Yeah, I agree.
Thank you, Dan.
And got two more questions. Now we're running up against time. Two more questions. You mentioned W-2 employees. Now I have a lot of P&C commercial producers that have trucking accounts, right? Most of the truck drivers that work for the trucking account are 1099 employees. This plan can be offered to 1099 employees as well, correct?
Well, that's a discussion we have to have. We want to make sure that they're being consistently paid because it is in the form of a payroll deduction.
Sure.
So if you have a group like that, let's talk about it. We never want to come out right away and say no because each work site opportunity is unique. So let's talk about that. We can talk about that offline.
Sure. And then again, going back to the spreadsheet, we talk about payroll deduction. We run into some groups, employers, right, that want to offer it, but they don't want to add another payroll deduction to all the benefits that they offer. There is an option where they can have that premium deducted from an EFT from the employee's bank account, correct?
Yes, as long as we do them all the same way. So it
Correct.
wouldn't
So,
be, if
yep.
we have 20 employees, they're all going to be done the same way. But yes, that's an option.
Correct. So there's 20 employees, can't do 10 payroll deduction, 10 EFT. It has to be one or the other.
Correct.
But that option is available. So if you
Yes,
if you run into a group, so and I
Yep.
believe one of the only few worksite plans or voluntary benefits that will offer that actual premium to be deducted from the employee's account, which I have seen to be seamless at sometimes because if there's high attrition turnover rate for that employer, right? Well, they don't have to remove anybody from the payroll deduction. It's already set up on the employee's banking information, so they keep it, they leave. It's already been deducted, so it will continue to be deducted as long as they decide to keep the policy itself.
Correct. Good point. Yep.
So, well, Maria, we are right up against the time. I want to thank you again today for joining us. And before we leave, as we wrap up, I'd like to remind everyone that today's brew and our entire library are recorded and shared on the brew page on our website at www.e4.insurance. Don't forget to subscribe to our YouTube channel to keep up with all the brewcasts. They're released every Wednesday. So Maria, I mentioned at the beginning, we're going to do a giveaway. So need your help on this. If you would, select a number between 1 and 50.
3.
3. All right. The winner for today's drawing is Stephanie Burr at White & Associates. So congrats, Stephanie. Be on the lookout for a complimentary CE voucher and a Starbucks gift card that will be coming your way from all of us here at E4 Insurances. And then I'd also like to mention next week, the brew will be released at 10 a.m. Central Standard Time on Wednesday, July 16th. Joining us for that call will be Steve Walker, our very own E4 VP of Institutional Accounts and partner. Also, Brad Mills, Symetra's Regional Vice President, and Doug Bowden, Symetra's Director of Advanced Markets, to learn more about Symetra's Multi-Life Guaranteed Issue Program. So, if you're an advisor who works with decision makers for mid to large size companies, do you think they have some key people that would like to keep around? Well, executive carve-out strategies are fantastic, but have you ever had one derail because of underwriting? If you have, you're not going to want to miss next week's brew call to hear about Symetra's solution for that. So again, with that, Maria, thank you. Thank you for everyone for joining in, and we'll see you next week on the brew call.